Let's check in with Mr. Phil Streible, joining us, Chief Market Strategist at Blue Line Futures. I want to get straight into it because I like to ask you a lot of questions, Phil. Welcome back to the show. Good to see you.
Yeah, thanks for having me on.
Okay, firstly, what looks best here? What's the hedge in this market that can both protect you from rising rates and or war in Ukraine?
You got to be short the equities. I mean, you have to, but you needed to do it on the bounce a few days ago when this war was escalating and the market strung together while every other stock in the sea was plummeting. Ours is going straight up. You know that's a bad thing. You got to sell the equities on there. Actually, we're covering some right now, but I think you sell the next bounce on the equities. We're raising rates into a economic slowdown. Forget this conflict even happening right now. That's the deal, and the economic data is going to continue to disappoint. The year-over-year comps will disappoint. They're going to disappoint probably for the next 2 months.
So you think if we do get a relief bounce on a geopolitical headline or something that you fade that? How do you know when?
110%. That's like this morning they were saying two big headlines came out, said that Europe was going to continue to import Russian oil. So you see oil sell off, you see U.S. equities bounce on that. Then you see that, hey, we're going in 1 hour, we're going to have a talk between Russia and Ukraine. They're going into peace negotiations. We bounce on that. You saw people chasing it. And what do you got to do? You got to sell into that. You know, there's too many hedge funds that still need to degross that are significantly, they're underwater right now. And they actually covered their shorts on that last rally. They're doing everything. They need to flip their monitors upside down if they want to be successful in this environment.
So I think that's ringing true for a trading community that's used to buying the dip. Do those days come back, Phil? What do you think could
they come back in the second half of the year when you have more when the comps all come in and they're closer aligned, and then also you get rid of this geopolitical risk. You get the Fed, you know what their path is of what they're doing, and then at that point is when you start going long and you start looking for data starting to accelerate again. So it's just a cycle. That's it. We're just in a down cycle. We're in a secular bear market over the next 2 quarters. And the way to trade it is to sell rallies in the markets. And, don't be courageous and buy these breakouts. It's just, they're not working. I think we probably already saw the high of the year on the stock market. I don't think we saw the low. S&P could be a few hundred points lower, but I would not be shocked at all if we ended up right here at the end of the year. So,
Phil, when we see this market generally punishing broadly, for the first section, it was cloud, it was growth for a year. And then in November, we saw a very discrete, specific tech peak with cloud earnings. But now we're seeing airlines crash. Obviously, throughout all this, Bitcoin and crypto too has gotten punished. So what's the juiciest way to get short?
Crypto acts like a high risk, high growth asset. And I heard that all that's nonsense about a bunch of people like Russia and Canada trying to get out and get into crypto. It was like a bunch of wallets were created and it turned out to be nothing. So that's why we're rolling.
Coinbase just banned Russian users.
Yeah, that's got to be what it is. So, and then the correlation of Bitcoin to the S&P is like 67%. So, there it is right there. They're too connected right now. I just don't see like a lot of areas. We took off some gold at 2,000 here today. The oil market's too volatile for most people. I'd hate to be the person who bought it at 130.50. Maybe we retest it, maybe we don't. I don't know. The grains are a little too sketchy right now. You got 200,000 people trying to buy wheat contracts into the close. The dollar index, that's probably your best play, but it's got to weaken up in order for you to get an entry in there. It's at the top end of the range. You don't want to buy it up here. And, I like assets like sugar, that if sugar can pull back a bit more, that could be a good play off of like ethanol and energies and things like that. So copper, if it got smashed again tomorrow, if it was down at 445, I'd be buying that. But other than that, just stay patient. You're better to lose 7%. I read this somewhere on against inflation with your dollar than try and be some courageous guy and buy the NASDAQ and end up losing another like 20%.
Right. I like that point. And giving us some good ones to look for here. So looking for copper if there is another big down day. And you mentioned gold there for a sec. I want to just touch on that for a moment. I think I heard gold in there, so I want to revisit. It doesn't sound like you're super eager to chase any of these major breakout moves. Does that include gold?
Yeah, never ever chase, never chase. Where's Kate? Though, like, do not chase. That's like that's like the biggest mistake I see people say. And the other thing is if you have some gold, if you're long, this is the other problem I have with a lot of people. They buy gold at a great price. Say they bought it at 1650, it goes to 2000, 2067. They won't take any profits. They'll just, it's going to 5,000, it's going to 10,000, whatever. You're not trading it at all. You're not compounding your wealth. You're just holding an asset class indefinitely that's on the next, tightening hike cycle and next reflationary growth cycle. Gold's going to go right back down again. It's just the way it is. It's just a cycle.
Hey, Phil, gold doing this big move, maybe not chase gold according to your analysis, but what about silver lagging behind? Not the same,
Okay.
but, doesn't it usually follow?
It generally does. I've been watching the gold silver ratio. That's what you really want to watch on this. On silver, if silver falls $1.50, which it tends to get smoked, you get some like peace headlines come out, it'll get smoked. I'll come in, I'll start buying that 1,000-ounce contract with people. If it really gets nailed down like $1.50, we'll buy call spreads and we'll go like 6 months out on them for the perma bulls on silver. Silver, people don't believe me that I'm telling you, there's like industrial demand destruction. There are supply chains issues. Half of silver is used in specific products. Oh, and back on the equity thing real quick. If you have all these companies canceling Russia, do you not think that impacts their bottom line and that's going to sell off? That's why people need to acknowledge that, like, if MasterCard and American Express say we're not in that market anymore, that's less charges there. That's less fees and stuff like that.
Sure.
Crude oil at $130. Yeah, airlines are not going to do so well. I mean, this is like obvious stuff.
All right, Phil the Bear, and not a perma bear by any means. So I'll add you to the list. Okay. Thanks, Phil. Stocks putting in the high for the year. I think we hit pretty much all the big ones. Thanks, Mr. Streible, joining us from the team at Blue Line Futures.